What's up? How you guys doing? All right, so I kind of want to start off with the challenge accounts because there's a little bit of discrepancy on who should like follow the swing challenge. And since majority, well, not maybe not majority, but a lot of you guys were out of the U.S. and the whole purpose of that account was for people in the U.S. who are under PDT, they can't day trade unless they have 25,000 under their account. So that was kind of the reasoning of starting that challenge specifically. But if you guys don't have PDT or are not restricted to it, I would follow my plays the next day. So for example, that QQQ play I gave on Thursday, we ended up gapping down. So if you would have taken this the next trading day, you would have easily made 100, 200% instead of basically getting out break even or like a slight profit, whatever it was. So does that, so whoever's following the swing account, is that clear? And usually you can hold these for, at least a day to a couple days. So this may end up keeping, this may end up gapping up to like 483 where I'm targeting. And this will end up being like a 20% play. But since, I gapped down and I didn't want to hold over the weekend, I ended up getting out my break even for this one. But if you guys don't want to hold overnight, and I generally don't like holding overnight, playing my callouts the next day is usually like gonna be a lot better, especially in today's market. What's another thing? Another thing too is like I'm targeting 25K specifically for the restrictions we have in the US. You need 25,000 to start day trading. So that 25,000 is literally just a number. You guys can stop at 5,000, 10,000, or whatever it may be. So a lot of people like ask me like, what capital do I need to start? You can choose whatever you want. If you only have 500, go ahead, start with that. It's literally just a number. 1 to 25K is just something I chose. Want to start from 10K? You want to start from 500? You do as you please. Like I get so many questions. Like even people are like, I only have 800. Can I start the 1K? It's like, yeah. What's really nothing's gonna change. Literally nothing. It's just a number. So I think other than those two things, I'm gonna start with the Q&A. All right, I got some of these questions I'm just gonna go over. But the first one too, actually, I want to teach you guys how to scale into positions because another thing with the swing account. Actually, let me start the simulation. See if this works. For example, I call this QQQ play. I believe like maybe like 5 minutes before close. Actually, it's not a good example. Um, let's go. What's another play I took? Let's see. Maybe the Amazon one was good. This was 318. Or maybe this one is good. Let's see if we can go. All right, here's a swing play I gave out on last Tuesday. So I called it out 30 minutes before, and I mentioned to scale in. But a lot of people, as soon as they saw an alert, they jumped in instantly, literally right here. This ended up making profit, but the entries some people got is really bad. If we look at the swing play, I called out for it was 195 calls. So here's the Amazon chart on the 5 minute, and here's the option price we were trading. I called it around 330. That was right here. You might have marketed it and got out between 4.1 4.2. This is a pretty bad entry. When I say scale in, let's say we're trying to grab let's say we're trying to grab 5 contracts. So you could have got one instantly if you wanted 4.15, and And then within the last 30 minutes, you can scale into the last 4 contracts. So maybe you could put another order of 4, you could put another order of 3.85. I mean, obviously we don't know how low this is gonna go, but the point is to get better entries. Or you can just do it based on time. If you want to wait 15 minutes to grab another 2 contracts, wait another 15 minutes, grab another 15 contracts. I just don't want people to instantly be to market all in as soon as the lure is called, because especially if you got a 4.2, this is an awful entry. So scaling in is depending on the size you are taking. How many did I take? Did I mention? I don't think I mentioned, so I honestly don't remember how many I got, but let's just say 4. I would have done 1 contract and then add the last 3 in the last 30 minutes. I'll slowly scale in. So instead of having a 4.15 entry or whatever it may be, I may end up having like a 3.9. And vice versa with even the callouts for the day trades too. Um, let's see what else I called out. It's Friday. 2 on QQ. So I did call one out here on QQQ at 10:45. So let's bring this over, and this was 477 0 TTE. So same thing, 10:45 is where I called that out. I believe I got 1.33 fill. So at this candle. But same concept. If you wanted to mark in maybe a quarter position, half position, whatever you want. And then as we get a retest or we go back to the entry, you could add or try to get a better entry. But these are relatively a lot quicker, obviously, than swing accounts. So you may only have like max 10 minutes to get into them. Looks like this one took off yeah, after 10 minutes. So instead of just, as soon as I call it out, let's say by the time you put it on Robinhood, you may have marketed in, 1.4 for your full position. But instead, have a starter position at like 1 or 2 contracts and try to get filled a little bit lower. So instead of having 1.4 fill, you might have gone like 1.3, even possibly like 1.25 to get, a better percentage on this run. Like even the fact that we made, we sold this, I think I sold this around like 1.8. Even though the gain was still good, no matter where you got in here, percentage, you're wasting like 35% just getting in into bad entries. The way I look at trading is the better your entry is, like you're almost guaranteed to, at least get out break even or some type of profit. You have a bad entry, like even if the trade ends up being good, your percentage may not be like worth taking a trade. So when I give out a call, just try to learn to scale in, and I'll try to like mention it obviously during stream, like so people can get into the habit of it. But just don't FOMO and get into your position fully as soon as the lure is called. What made me take this QQQ trade? Uh, so for QQQ, I was watching the 4 hour. So the way I analyze trades is I start a longer time frame and see what levels we sweep. So maybe it's not really. I don't like trading view a little bit better. I mentioned this early on the 4 hour. We swept some liquidity here on the 4 hour time frames on these wicks, and we swept this opening from Tuesday, and we wicked above it. And if you go into hourly, same thing. We wicked all this liquidity, closed above, and then on the 30-minute, we had a market structure shift. So my bias, I don't know if you were on the stream, but my bias for the first 15 minutes was bullish the whole day, just because of how we closed. And then my entry was based on the 5-minute. Actually, it was on the 1 minute because I was watching this zone we had right here. So at 9:40, we had this massive imbalance candle, and we formed a fair value gap. So some people probably had some stops here. We wicked it, and then we closed above. Let me see when the alert was called. Actually, this one was not alerted. I called in stream, but it was not alerted. The next one I alerted was at 10:45, right around here. So same thing. Since I was still bullish based on this fair value gap retest, I had another indication that we were going to sweep this low here. Oops, what happened there? We swept these stops here, closed above it, and then I gave the alert here to call out, and I knew we were going to target at least the highs. Once again, it's based on the higher time frame. Like if we would have never gone a market structure shift, I would have never been targeting the highs. Um, I mean, to recap, how I trade is liquidity sweeps, market structure shift, and then a retest of fair value gap. And this can be basically like in any time frame. Ideally, the higher the time frame, the better the indication the trade is gonna play in your favor. And since this was on the 4 hour, the next target would actually be the highs here. And then if we do target, let's just say this is 486. Once we break this high, this would confirm a trend of higher highs. So once we break this, we'll probably come back, retest some type of level, and keep going forward. A 1 or 5 minute closes inside a fair value gap. Could you still enter? No, I'd be patient and wait for it to close above, especially if it's longer wicks. Usually wicks are indication that people just got stopped out and reversing. So once again, on the 1 minute. So for quick day trades, 1 minute is fine, but ideally I look at 5 or 15 minute. But we got a test on this fair value gap and we wicked instantly, and that's next 1 minute candle closed above. For me, that was confirmation that we're still holding this bias. Is there such a thing as a high probability trade? Yeah, of course. I mean, I'm not going to take a trade I don't think it's high probability. Like, ideally, I want a trade that's at least 2-to-1 reward or 3-to-1 reward. Friday, you mentioned on a second 0 DTE. Oh, you were talking about this one? I think you were talking about this one, right? The one I entered here. This one wasn't as good because we retested this candle at 11:15, but we didn't sweep out any liquidity. So if you wanted to hold this, it's a little bit riskier because you don't know what's going to happen once we get to these sweep levels. But if you waited for any of these 5 minute levels to sweep, or even on the 15 minute, the 15 minute we got, some major sweeps here. So usually you wait till after sweep to enter a trade. But if you want to wait, if you want to get in at a retest of a candle, that's fine too, but your risk to reward is a little bit slimmer. All right, let me go some more of these questions first. I just went over this really quickly. I want my basement entries and exits. So two things for my entries is either the model I just explained, a sweep, market structure shift, and retest the fair value gap. That's the ideal entry on a higher time frame. But another way I also enter, and these are for quicker trades, is a retest of candle openings and closings. This one may be a little bit complicated to explain, I guess, to new beginners because it takes time to, I guess, embed like in your heads. But I'll go over an example or two. Might be a better one. Okay, so here's one. So I don't know if you guys heard me say this in another stream or chat, but every single candle we create in any time frame, whether it's the 1 minute to the daily, at some point in the future, we're gonna retest the opening and close of that candle. So for example, this charged the hourly, right? So we had this candle form. At some point in the future, we are going to retest that open. And that happened, this happened on Monday, 1 p.m., Tuesday, 1 p.m. So literally 24 hours later, we retested that open. So this would have been an amazing entry for me. And then if you zoom out on the 4 hour, we had this 4 hour candle that never retested the opening. So if you would have entered in the 1 hour retest, you could have exited that 4 hour retest. And vice versa. We have another one here in the 4 hour. Eventually this is going to retest. We just don't know when exactly, but these are key areas to mark out. Where did my question? What do you look for when deciding to full port or not? So I only full port on the 1K account, just FYI. And it really just depends on, I guess, the time of day. So if I find a trade pretty early on today, so I don't trade options till after 10:30 on those accounts. If I find a trade, let's say exactly 10:30, I will probably only do 33% or 50% of the capital of that account. So let's say 1K account right now is around 2,600, and Monday I find a trade exactly 10:30. I'll probably take half my portfolio. So I'll take the $1,300 trade. And the reason is that because I most likely will find another trade, in an hour or two later on. If I don't find a trade till, let's say, like 11:45 or 12, that's kind of too late in the day. I'll probably just full port, take whatever percentage I can, and just move on to the next day. Because with day trades, you can easily get like 5 to 15, 20%. I mean, ideally, it's not good full port. But like I said, it just depends on the time of the day, what I'm seeing. There's just a lot of factors in play. What is your strategy for picking swing trades? It's kind of the same concept, but obviously for swing trades, I look at a longer time frame. So for QQQ, the one I called out, I think it was Thursday, right? So actually what I saw on Thursday, remember how I just explained the retest of these candles? This Thursday candle retested Wednesday candle. So that was one of my reasonings of entering into that trade. And I was expecting us to retest 479, and then on the 4 hour, we have this for our 4 hour open at 480, like 1.76. And then we have the sweep above 483. So that's why I was targeting 483 at the end. Which, like I said, we're probably going to hit it. But since we gapped down, we started at a loss. Well, it's not a loss until you take it, but the count was down since we gapped. So it's a little bit scary to hold through this. That's why I'm mentioning, like, if you guys are not restricted PTT, just take it the next day. Even though this may end up hitting, it is a little bit concerning, just to face like a 20 to 30% drawdown. But yeah, my trades is the same as my day trades, just longer time frame, 1 hour to a day. Then there was a part 2 to that question. Are you concerned about headline news or government news affecting swing trades? Yeah, absolutely. It depends what's coming out. You can tell based on like like PMI or CPI or unemployment. Depending on where we are, it may be like slightly priced in, and that's just like intuition I have from like trading for the past how many years I've been trading, or at least monitoring the news at that point. So yeah, it's a little bit concerning, but even if we gap down or gap up based on the news, we're still gonna end up retracing at some point. So as long as we get the expiries, at least 2 weeks out, you should be good. But I think there has been 2 swing trades where I didn't take the trade because I didn't know what was gonna happen the next day. Let's see what's next. Well, TT announced who takes multiple trades in a day. I kind of just went over that. It really depends on the time of when I take my first trade. The earlier on in the day, if I take a trade, I'm most likely gonna have a second or third trade. How do you manage FOMO, prevent greed from sleeping into trades? I just go for small gains. That's really it. On the 1K account, I focus on 8% a day. If I take a position and it's instantly up 20% a day, you can just take that, call it a day. That's it. Because if you compound your account and you see the Excel sheet people have been sharing around, you can turn a 1K into 25K in literally like 2 months. So, I mean, that alone should really prevent you from FOMOing. There's just no point in like aiming for high percentage trades. The market is always going to give you opportunities. Like I used to fall for this trap when I first started trading. And I used to remember, like, I used to like tell myself, I'm like, what if there's no opportunities, a day from now or a week from now? But I kid you not, ever since like, this was like 4 or 5 years ago. And ever since, like, the market has just been giving more opportunities. It's just endless. So if you miss a trade, there's literally thousands and millions more coming up. I understand you have a mental stop loss, but I'm having a hard time gauging the price targets and stop losses. More specifically, the QQQ trade today. How did you know it would rally all the way up, even though it traded sideways at first? I already gave my analysis on this. If you missed the beginning of the stream, it's recorded and you can go over it. But in a nutshell, in a nutshell, it's because these swing trades were based on longer time frames. So even though shorter time frame may be a little bit bearish, the longer time frame consensus is a little bit bullish. After a liquidity sweep on the hourly, should I wait for a market structure shift and a next hourly candle or drop to the 15-minute? No, you can drop down. So once again, let's say this 4 hourly closed. We swept these levels that you had marked out. As soon as this 4 hour closes, you can drop down all the way to the 1 minute if you wanted. Oh, let's drop down to the 1 hourly. So this candle closed at 12 p.m. So let's go to 12 p.m. 12 p.m. Actually, let's go to the 30-minute because it's not too clear. 30-minute. We see this doji candle. And we have, this is the market structure shift right here on the 30-minute. That's what formed it. So you could always buy back in at that retest. And that's where the fair value gap would be holding as well. So we retested actually twice before reversing. But yeah, he just focus on a liquidity sweep and higher time frame, and then you can zoom in into shorter time frames. 30-minute, 15-minute, 5-minute, 1 minute. Ideally, you want ideally I focus on 5 or 15-minute if I'm day trading. How do you locate exit price targets? Either the candle closures or sweeps. Usually I target sweeps. Honestly, recently I've only been targeting the candle closures is because past 2 weeks has been choppy. So there's a lot of times where I may be targeting like the high. For example, like let's say this March 4th. I might have been targeting this high, but we missed it literally by pennies. So I'll probably just zoom in and just get like whatever exit I can, rather than focusing on those wicks. But ideally, that's what I focus on, because that's where majority of retail traders have their stops. Wait, is my audio actually broken? I wonder if it's because I'm recording in 2K. I don't know. I lowered the quality. See, I don't know if that fixes it. Well, it is being recorded, so the recording shouldn't be broken up. If it happens again, I'll lower the quality, so just let me know. When would it be appropriate to enter without confirmation of the market structure shift? If you're day trading or scalping, you can take a risk. QQQ if you wanted on the 1 minute. So this was, I believe this was Friday, right? Yeah, this was Friday. You wanted, you can mark out these levels where retail traders have their stops. So we had this one right here that I was watching. As soon as we wicked it by 2 cents and the candle closes above it, you can take a risk and instantly buy in. But it is risky because there's no confirmation bias yet. But if you do, if you do end up being correct, your risk to reward ends up being a lot higher. That makes sense, but it is risky. So on my scalp count, I don't know if you guys saw my trades. Sometimes I do take these trades, but I'm using small size. So if I do end up being wrong, I'll just take my loss. How did you pivot from 9 to 5 to trading? What was the moment that clicked for you and felt confident in your plays? So I'll be honest with you, I've kind of been trading the same for like maybe the past 4 or 5 years. The only difference is back then is I was full porting everything. So I had no risk management. I was, just your typical young kid. I just wanted to make it big. But as soon as I just started treating trading like a job or like a business, and I focused on just small gains, that's when like it just finally clicked with me. I'm like, there's no reason to make everything all in one trade, 1 week or whatever. It's such a bad mindset to have. So as soon as I fixed my mindset and just focused on small gains, I kid you not, I became more profitable. Like I don't know how it makes sense, but that's just what happened. My trades were the same. It's just I stopped full porting and I diversified my accounts. So my long term portfolio I rarely touch. I have my swing trade account that'll check maybe like once or twice a week. And then for the challenger accounts, obviously my risk is a lot higher. But since I have like safer and medium sized and risky accounts, I can trade differently based on each one. So if I blow up a 1K account, I can still, go on with my life. I then blow up my, my long term portfolio, which is my biggest size. That makes sense. You just gotta position yourself to be in a position where even if you have a bad day or bad week, you're still able to trade the next trading session. What are your long term goals in 5 years? Just to get my long term probably to like into a size where I can live off of dividends. That's probably like 2 to 3 million. What's the plan after the current 1 to 3K challenges are done? Either restart it or continue it. So it just depends up to you guys. Like the last challenge, I was fine. I was down to keep going into 100K, but I literally just put a poll and I asked you guys what you guys wanted, and you guys wanted me to restart it. So it just depends. Once we hit 25K, I'll do the same thing. I'm fine with doing it again or moving forward. There's a lot of resources I want to enter a trade, but can you show some common traps or potentially false positives I look out for? For traps, it's mainly volumes, but also just don't FOMO. Like a lot of people that might have saw this break might have started buying here. I just patience is literally the best thing. You just give this 5 10 minutes, you'll start realizing you're like, oh shit, people probably bought into this because they thought it was a breakout. But if you just waited for some type of retest or waited for some stops to get taken out, you could have bought at better areas. So just don't FOMO. Just patience. And there's so many trades throughout the day. It's dumb to chase. I'm sorry if that answers your question. Where were we? How important overnight pre-market candles? I would only focus on those for QQQ and SPY because those have futures. So for example, QQQ has NQ, and NQ usually has a lot of volume pre-market. Um, so like when I trade futures, I definitely look at pre-market and after hours. So only for QQQ and SPY, I would focus on candlesticks outside of trading hours. Yeah, and it basically goes over your question since you're generally low volume. That's correct. It is low volume. But once again, SPY and QQQ, if you go to the futures, it has the same movement, but there's still a lot of volume. Fair value gaps, I would focus mainly on the New York session. But they do work out outside of that session, but the best session is definitely just New York. What is the biggest life lesson you've learned from trading that has made you who you are today? I mean, it definitely has taught me patience. I mean, I took L's for like 3 to 4 years straight. So I just gotten so used to losing that it doesn't affect me at all anymore. Uh, like, I don't know. I've just gotten so patient and calm after just trading 4 years in a row, just like constant struggle and losses. Like, it just doesn't affect me more. Like, I can lose easily like 5, 10 grand today, and I'll wake up the next morning not feeling any different. Is it possible to take TT trades on a prop account? I mean, if your prop account is only for futures, so if I take QQQ and SPY, I mean, sure, but for trading futures, I wouldn't be holding anything too long term. It's mainly for like scalping and quick trades. I mean, yeah, if I trade SPY and QQQ, sure. How to enter and exit trades when not trading options. I mean, it's the same concept. If I call this trade out, I think I call this one out 10:45. If I call this out, my exits can literally be the same no matter options or stock. It doesn't change. If anything, with stocks, it's a lot easier because let's say my target was 477.5, you could easily get out. But with options, I think for this one, wait, was it this one? I don't remember what I said, but I remember I think I said actually I think I originally said 1.9 and it missed it initially. So let's say I was aiming just for this break. If you were just trading the stock, you could have instantly got out. You would have taken your profit. But if we would have reversed, oops. If where was it? If we would have reversed here on options, you would have missed my exit because I said 1.9. I'm saying assuming we reversed, but we ended up actually hitting that exit. So if you're trading it to stock, it's a lot easier to get out. And then can go over past trading, explain why you chose to enter and exit a trade, why you did. So I just did for QQ on 2 of the trades, and I have my past video. So I think what I'm gonna do is just clip those segments, my past videos, because they are fairly long, and just shorten them maybe to like 5 or 10 minutes, and then you can just watch those segments of the video. So I'll go over my past videos and cut them out. Right. So that's everything. This will be posted on my YouTube channel. What are the main tickers you trade? Mainly SPY, QQQ, and tech stocks. Apple, Nvidia, Amazon. My first challenge, I traded Apple a lot. Like I think there was 3 days in a row where I exclusively just traded Apple. It just gave a lot of opportunities. The option chain is very liquid. But if you want to just focus on 2 stocks or ETFs, SPY and QQQ is all you need. Can you go over looking at higher time frames for entry? I never zoom out. You should always zoom out. What do you mean? Always, always, always zoom out. I think of one that we took really good. So if you zoomed out Qs, right, you would have noticed this fair value gap we actually have in daily, and I believe I marked this out in a previous video. But we literally went in and just tapped it, like to the tick almost. So if you would have zoomed out, you would have had this marked out. This would have been a great area to look into. Then if you zoom in to the 4 hour, you would have noticed that we tapped it in, but not only just tapped it in, but we also took out stops from this previous day or whatever day this was. Then the next 4 hour, we had a market structure shift. So this would actually have been a great area to take a swing trade. I would have marketed into this for the next day. And this was Thursday. Yeah, so look at that. If you would have marketed in just based on what I just marked out, this is where we closed. we ended up gapping up like 5 points. If you would about 2 days to expiration for these calls, I think this would have been like 100% just for marking that out. To look for in time frames during 3K. I already mentioned this. Anything over 1 hour. 1 hour to the daily. You guys are joining a little bit late. I'll post this soon so you guys can see the recording. Please restart the challenge. Well, the thing is, this is one of the things where I put a note. You can basically start at whatever capital you want. 1K, 25K, 3K is all just a number. It's literally just a number. If you only have $100, start with $100. If you're comfortable starting 5K, start with 5K. If you don't want to end at 25K, end wherever you want. It's all just a number. So even if I end up going further than 25K, you can just restart. You just restart the 1K, I'll give you 125K. So it really shouldn't affect the trades at all. The trades are still gonna be the same. So yeah. I did start a long-term investing channel, but I'm waiting to onboard Henry because he's much better fundamental investor than I am. Much better. I think he said he's gonna. It was supposed to be Monday, but he pushed it to the 31st. But the 31st, I'm gonna have a webinar with him. Then long-term trades will probably be focused towards him. For the 1K account, I think we're sitting. I already forgot. The 1K account, we're at 2,600 almost. So we're up like 1,500%. And the 3K one, we're up to $4,100. So that's almost 35%. Anonymous, I try to post my limit orders, but for the day trades, there's a lot of, I guess you can say, action going on. So, and I don't know if you're here for the last challenge, but I promise you, majority of people that followed my last challenge ended up getting better entries and exits than I did. So if I were to put an entry and you follow me blindly, you probably could have just waited 2 or 3 minutes and gotten like a 5% better fill. Why did you ask that twice? What's going on? I mean, I'll try to. I mean, if you join the streams, I'll probably mention it on stream, but it's just too much to type out. Because I have to like look at chat, look at my charts, take the trade on my end, type it all out. At what point did you exit the QQQ calls? 320? You're talking about the one we took when I called out 1045? This one? I initially said 1.9 once we sweep this high. I was literally just targeting the day high, that's it. I just wanted us to sweep here. As soon as we swept here, that's when I started scaling out. I think I said, I don't know where I started scaling out somewhere here. As soon as we swept this. Then I got the rest filled to 1.8. Well, I mean, this trade, like, if you would have taken it with me, you would have been up instantly like 30, 40%. So it shouldn't matter where I exit. You should be, I don't know, you should be happy with that. Like as soon as it hits 20% plus, just start scaling out. Actually, that is another thing I should mention. Any trades I take moving forward, if you see 15% plus profits, I would just start scaling out no matter where it ends up going. Because for the 1K account, the daily goal is 8%. So let's say I full ported this, right? And within a matter of minutes, I'm already up 10%. I could have just closed 3 minutes later and it would have been done for the day. Or you can just, close 20%, 20%, 20%, whatever you want to do. It's kind of difficult to type that all in while streaming. I mean, like I said, I will try, but I don't know. If you missed a trade, let it go. Don't chase. Yeah. Oh, another thing too is I think I saw someone say, should I get back into this trade? Usually you shouldn't because the play already played out. And if you're paying attention to the stream, like I'll give my analysis on why we should like push the next 5 minutes or what we should do and where we're gonna sweep. Once we get a sweep, usually we might target the next sweep areas. Oops. Actually, let's just go here. I mean, technically, yeah, you could have held this, and this probably would ended up being like 500% run if you held this to like the last minute of the day. But it's not a good idea to hold. I would rather get out 5% like lost than to expect a move later in the day. So if I call this out here, we got out here, you shouldn't re-enter. Unless once again you're fine with taking a quick 5-10% loss, or you're fine getting out quickly at a 5% 10% profit. But ideally I wouldn't re-enter if the trade already played out. Once we swept this area, we can start looking for other areas of sweeps. Do you think we're entering a bear market soon? I'll be honest with you, I'm probably not the best person to ask that. Me personally, I want to say no. I want to say this is it. But Piper says otherwise. And it doesn't matter. Like we can keep going down another 20 points or 20%. I mean, if we're day trading, it shouldn't really matter. You just play whatever move you can get. Yeah, I mean, Piper mentioned something about tariffs. He thinks the market is artificially being pushed down until, and I don't know. Like I said, I don't know. We can ask Piper Monday. For day trading, I really don't care about fundamentals. Yeah, thank you. Trump is doing tariffs to lower the interest rates. That's all it is. Yeah, I think that's what Piper said. I don't know. I think mentally I just kind of ignore fundamentals when I'm day trading, because in the past, when I would focus on fundamentals of day trading, it would affect my analysis. Like if I was trading a company that's has really good growth, but technically I'm bearish, and I may be right in my analysis, my brain will shift to being bullish just because of fundamentals. But it's not good to mix those two in your day trading. No, you have mental stop losses, but like a profit percentage of 15. What percentage? Wait, was a good stop loss at 1K challenge? I would do 20% max, ideally 15%. My last challenge, I think I was aiming 50%, and one of the days I did end up hitting 20%, but that was on me because I had a meeting and I let it slip. But even if you take a 20% loss, you can easily make it back in 2 to 3 days. But mental stops is, I mean, it's just based on your risk parameters. I see a lot of people getting stopped out way before I do, which is fine. Everyone should have their own risks, their own profit goals. If I'm fine with 50% loss, some people may not be. That may be too much risk for them. But this is why this is a challenge account, because I don't care about taking a 50% loss on a challenge account. This is my long-term portfolio, that would have devastated me. So my risk is a lot different between each account, and that's why I like having multiple accounts, because you can have a risky account, you can have an account you don't care about, you can have an account you don't look at. It's just good to, you know, to have different risks and risk parameters. How do you think it's just a retracement versus reversal? It depends on my long-term bias. If my long-term bias starts up bullish, I'm only going to look for bullish trades. So once again, I'll go over QQQ. I was bullish even by that swing trade. Even before this gap down, I was bullish since here. So my bias was bullish. And the next day we gapped down, and then we swept this liquidity, and we closed above. So as soon as we saw that close above, I remained bullish. If this candlestick would have closed below here, I would have been wrong. My bias would have been wrong, and then I would have switched my thesis. But that's as soon as this candle closed. So a lot of my trading is just waiting on the candle closure. If you see some of my messages or my commentary, I wait until like a 50-minute candle closes because you don't know what's gonna happen. Like for example, if we're watching this live, like this candlestick live, right? 12 p.m. hits. As soon as this 12 p.m. candle opens for this 50-minute candle, we end up going down a little bit, and this might have scared a lot of people. And then this would have been a red candle breaking these because I think we swept it by like a penny. If you would have been reacting before this candlestick closed, you'd probably be like, oh, we're bearish, we're going to go down. But if you would have just waited 50 minutes, this candle ended up closing extremely bullish, and we ended up forming a fair value gap. That's why it's really important just to wait until the candle closes. Same thing with the 5-minute and any other time frame. But go over what I said earlier. Every single candlestick we ever form between the 1 minute to the daily will at one point retest to open or close. Does that make sense? I think I went over this on QQQ already. How are mental stops even possible when we need to wait for candle closure confirmation? You just go on a lower time frame. So for example, let's say I was in a long trade here and I had this fair value gap marked. If we had, here's the brush tool. So let's say this is the fair value gap I was looking at. Let's say we had a 5-minute candle that closed right here. I would have just, taken my loss no matter what percentage that is, 5, 10, 15, even 20%. But yeah, I understand what you're saying. If you're looking at the hourly and you're waiting for a candle closure, we could have gapped down way much lower. But if you go into a shorter time frame and you have your fair value gap or openings marked, that's where I would get stopped out. When a fair value gap is created and never retested, would you still enter that trade? Yeah, you can. I've said this previously. Um, let's see this on the 1 minute. So here, for example, on QQQ, right? So it was at 9:40 a.m. Friday. I had this fair value gap open. Let's say we just end up to keep moving up, right? Because we don't know exactly what's gonna happen after. You could have technically just entered instantly, but I would just do a small position. So let's say I only wanted like, I don't know, like a $3,000 position, right? I would maybe start with like $500 or $1,000 position max. And I would just mark it in. And as we get the retest, I will start scaling in. Because sometimes we do form fair value gaps and we never get retest until like maybe hours later or even the next day. So it's fine getting in instantly, but like I said, you just have to start with a small position because you don't know if you do end up getting that retest. Especially with options, if you do get that retest, that might end up being like a 5-10% lower entry. But with futures a lot of time I just instantly mark it in. because you don't have to worry about decay. You've been killing the 3 minute lately. Should your stop loss be based on the 3 minute? It could be. I mean, a lot of people trade on different time frames. I used to trade on 2 minute. I actually know some people that trade on a 30 second. Spungus trades on a 10 minute. So whatever works for you. I just stick to the known ones because I like to focus on time frames that everyone else is watching. So like the 5 minute, 15 minute, 30 minute, 1 hour. This is something almost like every single trader looks at. So if you're looking at something that everyone looks at, the areas are more likely to hit because that's what people are watching. Is it smart to full port on a daily with accounts under 5K? It depends on your risk tolerance, man. What does 5K mean to you? 5K is a significant amount for you? Then no. If 5K, is something that you can live without, well then yeah. Like once again, I would never do these trades on my long-term portfolio. But me personally, on any account like under 20K, I'm fine with full porting. There's a lot of different trading models in the members guide. Um, that's honestly up to you. Personally, I don't trade the way Spungus trades at all. I don't like using indicators. Period. The only thing you'll ever see me have is the fair value gap, or sorry, the VWAP, and even then, I barely use it. I know Spungus uses like the EMAs and the clouds and whatnot. I used to use that like 5, 6 years ago and never worked out for me. But if it works out for him, great. So my recommendation is you just go over, I guess, a little bit of all of them, do some back testing, see what works. But indicators for me are just noise. I don't like looking at them, especially makes a chart messy. I like to keep my chart clean. Yeah, at the end of the day, just stick with what works with you. I mean, Spung is a profitable trader. He uses all of them. Uh, the thing is, like, I could probably use his exact same strategy, but I may end up being unprofitable just because like it won't stick with my, I guess, with my brain. My A plus setup. Let's just look at the trading model I use. I want to sweep in a higher time frame and a clear market structure shift and retest the fair value gap. The only issue with that model is sometimes it doesn't occur every day in a higher time frame. Um, or even if it does occur every day, it may not execute till like 2, 3 hours later. And with options, that could be an issue because we have decay. But if you're trading futures, that model works perfectly. How long do you plan to stream? I'm probably gonna end this soon. It's been 55 minutes already, and I answered the majority of the questions. You mentioned you don't usually draw order blocks. Is this something you do mentally, or do you use less value, or do you see less value in order blocks? I mean, I used to trade them, but I think the market has changed. I think back like 3+ years ago, I think they used to work pretty well. But the issue with order blocks is technically you have an order block here, 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 here. It's just too much. And if we end up reversing it in bull market, none of these order blocks are probably gonna hold. They don't mean anything. So for me, I just feel like it's like a flip of a coin. I don't know. I don't like them. Not anymore, at least. How did you learn ICT? I mean, I technically learned it on my own. I used to trade Bitcoin back in I want to say 2019, probably even before actually. Maybe 2018 actually. Back when we first crashed from 20K, when we first hit 20K and we crashed down, during that bear market, I traded Bitcoin exclusively, and I learned a lot about just liquidity and how we stop out retail traders, like on my own. Like I noticed there would be a lot of areas where I may like me personally, like I would, let's say I saw this, I would have my stop here, right? Let's say if I was short, I would have my stop here, I would get stopped out, market would literally reverse, go back to maybe where I was targeting and further down. So this happened to me hundreds and hundreds of times until it started finally clicking to me. The market just has like magnets or key areas it ends up going back to. So just slowly understanding why this happens. Um, I don't know, it's just kind of like how I like just developed my trading. But it's not, I didn't like start learning this until like it started happening to me like literally hundreds of times. And then later on, actually I learned about ICT till literally 2 years ago. I don't know how long he's been around. But his liquidity, fair market structure shift, and fair value gap is just, I knew that before he even taught it. But I just like his terminology better. When you say I would take these trades in long-term account, do you mean percentage or portfolio size or the trade itself? If I take a trade on my long-term account, it would still relatively be small. So let's just say you have a 100K account, that's your long-term. I personally wouldn't take any trade more than 5% of the whole account. And even then, I would only risk a small percentage of that trade. Like on my long term, if I'm losing more than 1 to 2% a day, something's wrong. But even if you end up losing 1%, I mean, you can still make that back. So the less riskier the account is, the more feasible I want it to be recoverable. I lose 1% on my long term. Can I recover that fairly quickly? Can you trade futures for callouts during trading hours instead of options? No. Majority of people here are for options. The thing with futures is I don't know if you ever see me scalp during some of my streams, but I'm in and out so quickly. The majority of my trades are less than 2 minutes long. I don't know how you want me to call those out, unless you're just watching the stream with me. But actually giving callouts like in chat, it's not doable. Unless I'm marking something out on a higher time frame, which in futures I don't really look at because I trade futures on prop firms and they force you to close out any positions before market close. So for futures, I usually trade from like 6 a.m. and I'll be done by like 9 a.m. anyways. I'm not gonna stream in the morning. It's already pretty tiresome streaming for 2 hours. I do handle taxes on your gains, so I just automatically put 35% of what I make into like a very safe ETFs or whatever like that has moved that much, and just collect dividends or whatever. Uh, so if you make like let's say 100 grand, I would put 35,000 into just like an ETF that collects dividends, and it's relatively pretty safe to the market conditions. Then once you owe taxes, just give out everything other than the dividends you collected. How long have you been using this trading strategy model? I mentioned this previously. I've been trading relatively the same way for the past 4 or 5 years. The only issue I had when I first started is I was full porting every trade, so I didn't have any risk management. The only thing that changed is 3 years ago, I just started treating trading like a job slash business, and my risk management is a million times better. All right, it's been about an hour. I don't want this video to be too long. I think I'm gonna stop recording there.